All right, let's get right into it. Business Express on a Monday morning here on Smooth 98.1. This is your Love Music Love Live station, 19th day of January 2026. It's a beautiful day, a great way to start the week here on the smooth side of life. Ayokunmi Kekirekum with you. Looking forward to what's going to be a great show, great Monday, a great week as well as we get to, should I say, the business end of the month of January 2026. It just seemed as if the month would take about 65 to 70 days before getting to the end. But we are already on the 19th day. Still feels like 2 minutes ago, I was wishing everybody Happy New Year. But, anyways, we're thankful to be able to see another day and another opportunity to try again and keep things going. We'll be talking about business in about 15 minutes, bringing you up to speed with what's going on within that space. And this morning, we'll be taking a look at Nigeria's banking sector. Now, Vetiva Capital Management have just published a new banking sector report for 2026. And the author of a said report is going to be joining me this morning to have a conversation about it. Joining me is Oluwayemisi Sunmola. He's a banking analyst at Vetiva Capital Management. Very good morning to you, Oluwayemisi. Great to have you on the show.
Good morning. It's great to be here also.
Yes, indeed. I remember last year, I think it was middle of the year, we also were looking at the banking sector outlook for
Yeah.
the rest of 2025. I think that was June or July. I can't remember specifically.
Yes.
And
Yes.
now here we are again.
Yeah, it's great to
You
be
know,
here once more. It's
great
great
to
to be here
actually have
once
you.
more.
Oh, yes, indeed.
Yeah.
For you
Yes,
out there
indeed.
listening to us, you can join us on the show. Send your messages in on WhatsApp on 0911 999 0981. You can also join the live stream on YouTube. You can find us at Smooth 981 FM Lagos. Smooth 981 FM Lagos. All right, let us jump right into things, LYMC. Now, if you were to summarize your report, can we confidently say that Nigeria's banking sector is in, how will I say it, healthy shape?
So, one on a broad form, the banking sector is more healthier and more predictable when compared to the 2023 slash early 2024 cycle where we saw a lot of FX distortions.
Okay.
Also, the banks at that point had some significant forbearance exposures, which have now largely been contained. Also, we also saw the CBN's banking recapitalization exercise also come into play around the 2024 era. Currently, as at now, all the banks under our purview, ex FCMB, which is already in its last stages of their capital raise, have all
Okay.
either met or exceeded their recapitalization. So what I would say is that the banking sector is in a more healthy and predictable cycle than previous years.
Okay, that is a good thing to hear. I know that all the banks are trying to get everything together, cross all the I's, cross all the T's, dot all the I's as well. I'm talking about the bank recapitalization exercise. Can you just remind everyone about that? Because I know the deadline is March of 2026. It seemed like when it was announced before, like, oh, it's still so very far away. March is in about 2 months or thereabouts.
Yes. So the recapitalization exercise ran from about April 2024. So basically, the CBN gave the banks 24 months to comply with this directive, with targets for different banks. So like the international banks, which most of the tier ones are under. Had to raise 500 billion, national banks with 200 billion. So as of large, we've seen most of the banks raise that capital either through fundraising one
Mm,
or through mergers, the Providus Unity Bank merger. Um, Apart from currently, like I said, the likes of FCMB, which are on the latter stages of their capital raise, we are still of the expectation that most of the banks either have already met their recapitalization or are on the later stages of raising their capital, which we also expect that they will meet their capital requirement by that March 2026 deadline.
Okay, looking at the fact that some banks have already crossed the finish line, Some other banks are looking at the finish line right now. Now, do you think or do you expect all the banks involved to actually meet that deadline by the end of March? Or are we going to see some very interesting things happening?
Yeah, so base case is that most of them actually meet. Most of the likes of even Access and Zenith have already surpassed the 500 billion minimal um,
Right.
directive. They've
Right.
exceeded it well. The most of the banks are already in their late stage capital action. So in terms of our base case expectations, all of them meet their capital requirements.
Hmm. Okay, before we leave this issue, just to have a very clear idea now, for the banks who don't meet this deadline, what's going to happen to them?
If they are international banks, they would have to be downgraded to the next banking license. So if you're not able to raise 500 billion and you raise 200 billion, and your capital requirements are up to 200 billion, you are downgraded down to a national bank from an international bank.
Hmm.
So we just expect that their licenses will be downgraded from their current levels.
All right, interesting. Well, the clock is ticking for all the banks. Let's see what happens by the end of March of 2026, which is not too far away, believe me. Okay, let's talk about the monetary policy rate, the MPR. Now, it's still elevated at 27%. Now, could you just define the net interest margin for our listeners and how the MPR for this year could actually impact it?
So the net interest margins are the actual returns that the banks make on the loans they give out once you subtract the interest they pay on deposits. So what will an higher MPR, what will the high MPR so mean for banks? It will mean that of one, they can raise more from loans, right? And also however, they also have to pay more on deposits, which implies higher cost of funds. However, our
Okay,
base case expectations is that we would see a moderation in this NPR rate, right? So when that happens, we would see cost of funds get lower, especially for banks with higher CASA mix, that is a higher volume of their of their deposit base being in
right.
current and savings accounts, while the more expensive deposits, which are the term deposits, which are generally repriced higher, have more interest paid on their deposits for them. So in terms of our expectations, we expect that over the course of the year, we would see a moderation in interest rates, which would actually say a lot of bank, which would also encourage a lot of people to take on more loans for productive activities. So we'll see the banks actually record, we expect that they would record higher earnings on their interest on their loan books, right, as
Okay,
a result of
okay.
disposal of more loans, while in terms of their expenses, given the fact that we expect that they would have more current and savings accounts, they will pay less on those deposits as a result of this. Would expect that they will be able to either maintain or exceed their margins.
Okay. Now, it's very interesting you mentioned savings accounts because I want to imagine that a lot of Nigerians out there would have one or the other. Now, for those who we assume have these bank accounts, does an elevated MPR mean higher interest rates on those savings accounts?
So generally it would imply that on the long run, but in terms of how this is fed into, we often see that the interest increases on savings and current accounts often lag the rate at which it is increased, one on loans given and two in terms of term deposits. So in terms of
Okay.
general expectations, we do not expect that the interest rate paid um on these savings and current accounts will be repriced as fast as those on loans given, hence the margins would be maintained.
Hmm. Okay, thank you for that clarification. I just needed to put that question out there. Now let's talk about something that a lot of people have seem to have an issue with, and I'm pretty sure that you can relate to this as well, because we see a lot of people who often lament the fees that they are charged on their accounts, talking about stamp duty, this one and that one. In fact, just yesterday, I had a conversation with a friend of mine who was just lamenting on the fact that why is it that every time he does a transaction, he's debited for this, for that, and so on and so forth. How important actually is fee income to these banks?
Um, So fee income takes up a significant chunk, a relatively significant chunk of the bank's non-interest lines. So those are non-interest revenue basically composes of the income gotten by bank from activities not generally linked to either loan giving or deposit receipts. So in general, even when we saw relative stability in the bank's FX lines, right? Where we saw a kind of moderation in their the amount of gains, their revaluation gains. We actually saw their we actually saw the amount that they got on fees and commission actually still stay either stable or strengthen. So we
Okay.
also expect that in the year 2026, these lines would actually also be significant and form a huge chunk of their non-interest revenue.
Hmm. Okay, thank you for sharing those thoughts, Oluwayemisi. Now, as we wrap up the conversation this morning, I can't but bring in some technology into the conversation here, and I'm just curious. Do you see an increase in digital banking in 2026? I know it's been on the uptake for a while, but do you see 2026, taking things to another level in terms of its adoption?
Yes, we're still of the expectation that they would actually see more online transaction and technological advancements in that space. Already, the CBN gave a directive effective January that reducing the amount of cash withdrawals that customers, individuals, and corporates are allowed to withdraw in a week. So I think for those of customers is about 500K. So what this would imply is that most people will start taking their transaction online. So
Hmm.
this would actually lead to more technological advancement, and we might actually see growth in the technological space.
Right, and we just hope that all the processes are seamless, not stressful, no failed transfers and so on. I mean, it's not going to be perfect, but it should be better than it actually is right now. That is the hope of everyone out there.
Yeah.
All right, let me
Yeah.
take a message. This is from Gilbert Musa in Festac, who says, good news about the attempt made by Nigerian banks to meet the new recapitalization figures. I am of the opinion that banks should do better in customer service by communicating to customers when an account is about to be inactive and equally make reactivating inactive accounts seamless. Easy to reactivate no matter the duration of inactivity. Do you agree with that, Oloyemisi?
Um, so for the banks, I believe that this is would be an individual bank thing, and it will not be good to just generalize that all banks do that when they're about to render banks inactive. But what we've seen from the banks is that they have actually, especially with the increased adoption of fintechs, we've actually seen them improve on their services, right?
Mm,
And we expect that this would be a work in progress, and going forward, things would get better, especially, and they would be able to actually come up with better methods of doing this. Already, we've seen a lot of the moves by the CBN to actually curb some of the excesses of the bank. So, in general, we expect that this will be built upon, and
right.
um, maybe not immediately, but gradually.
A gradual process of improvement. That is what we ask. Let's see those steps that take us to a better way of doing things. Thank you so much for joining me this morning. I've been talking to Oluwayemisi Sunmola. He's a banking analyst at Vetiva Capital Management. It's been a pleasure having you.
It's been a pleasure being here once again. Thank you very much for having me.
Thank you so much. Do have a great start to your Monday and your week as well. Do take care.
Thank you very much.
All right, Lagos. It has been Business Express this morning on the Smooth Breakfast, brought to you by Into Switch. My name is Ayokunmi Kekere. Keep it tuned. The show kicks on, getting you started for what's going to be a beautiful Monday morning. All righty.